Good morning, everyone, and welcome to the Morning Market Report, guys. Little hiccup there at the intro, but that's all right. We got a lot to go over today. We got job numbers that came in way down. We're actually seeing, as the thumbnail shows, a big change there in the likelihood of our rate cut in September. We're now looking at I know it says on the thumbnail 12%. Guys, it's now a 16% chance that we see a 50 basis point rate cut going on in September on the 17th. About how many days away is that? Let's see here. We're on the 5th right now. So, yeah, 12 days away from getting a 50 basis point rate cut. Right now, the markets are reacting to it, and we're getting a pump. But really, the one you got to watch, is going to be right here. Guys, gold absolutely ripping off, getting another pullback into the platinum pocket and breaking outside of the 887. We're going to be breaking this down and a whole lot more right here today on the Morning Market Report. You guys know what time it is. Take your seats, get your notebooks out. Classes in session. Let's get it. Welcome, everyone, to the Morning Market Report. Appreciate all of you guys being here. OC, you guys already saw them because I had to go and connect some screens. We had a little late start this morning, so I had to get some stuff prepped. But appreciate everyone being here. We're going to dive right in on all of this info that we got today on job numbers. We're also going to talk about the Beige book from the Federal Reserve. Break that down a little bit for you. What does that mean? And what does 50 basis points look like for the overall economy? Because historically, when we've had 50 basis point rate cuts, I'll give you a little hint, little secret. First of all, shout out to the Auto Gang joining us. Appreciate the OGs rolling in, kicking in the door. I see Alex O Crypto there. No O face on the thumbnail today, Alex O. Just John Travolta saying, what the hell is this? 16% chance at 50 basis points. Historically, when we've had 50 basis point rate cuts, the six out of the last 7 times that's happened, we had a recession. So keep that in mind. That's why we said today, the average American is screwed. If you're not investing, you're going to be broke. And that is just my opinion of it, my humble opinion. But I think that might also be the opinion of this guy. Bring him back up here. OC, what's up, man? I don't know if you've seen the job data this morning, but it was horrendous. It was horrendous. Right now, if you guys are watching this and you have a job, reach back, tell yourself, good job, give yourself the celebratory pat on the back because you're special right now. A lot of people losing jobs, a lot of job cuts. So layoff revisions also, guys, we got those too. We're going to talk about those for the past 2 months. And we've got another report coming out. And not too far off from now, about 4 days from now, we have another job report coming out that's going to be horrible. So, OC, I want to jump in on the Bitcoin chart. Let's talk about the volatility that came in this morning. You'll see it on the chart when you pull it up. But let's talk about that. Then let's jump in on this news, unravel all of this data. What is the so what of it? And then we'll take a look at some deeper look on some charts. Of course, I am still calling for $157,000 Bitcoin in October. So we'll figure out how we get from where we are now to that point, and are we on the way there? But OC, let's go ahead, jump over to your chart, and let's take a look at Bitcoin. What's going on with it today, man?
Absolutely. So, by the way, really interesting. We have 157 viewers. So, guys, please make sure that you click that like button. And it just dropped to 156. So still pretty good, pretty good. There you go. Click that like button, guys. So very quickly, we were expecting actually this pump. Remember, guys? So the first one, we longed this Bitcoin in here. We took some profit in these 2 candles, and then we still were aiming at this high in here. We have a rejection. That's what I said. Well, I think that we still have a possibility to reach this top. Right here, I think we have that confirmed rejection. So what happened? We went down, and remember, this was the opportunity for us to get a higher low, right? So what happens? Well, we didn't went exactly to the area that I was expecting. I mean, we were just a little bit short of it, right? But very nice. We have, look at that flip of the ribbon. In fact, remember, we were Xing the zero line right here for that flip of the ribbon, right? So we had that flip of the ribbon, head back at the top. Well, we are almost there, hitting that target. And finally, well, we have created a higher low. Important in this case, from this one, it's still a lower high. All right. So we absolutely need to break this area for this to be a bullish continuation. All right. So don't let it fool you. This was, yes, a good high. All right. But it was not a higher high. We do have a higher low, all right, but we absolutely need to take these previous highs, and better yet, hopefully we can take these highs, all right, and make a statement for the next movement. So we still need to take these areas here for us to confirm a bullish movement, but I think we are on the right track. And 157K, I mean, that doesn't sound not bad at all, and I'm all in for that. Although I still stand behind that we need a little bit more of pain. But the truth of the matter is that we have broken above the silver line. All right. We are fighting to be above dynamic reactor, and we're having a curl back up on our volume on our linear regression oscillator. So things are pointing positive, right? And that's what I was asking Piper. If we can go back into dual camera, I was asking Piper yesterday, Piper, uh, we know that REKTember is coming, right? So
Mhm.
usually, in average, it is a bad month for traders. First question: why is it a bad month for traders? I mean, overall, especially for crypto traders. And second question: if we get the rate cuts, most likely we're gonna spike in the possibilities of a rate cut. And then if we get rate cuts, is that a counteract REKTember? I mean, are we gonna be ranger or are we gonna be pumping? Because at least I would say that we're gonna be ranging. But where is it?
Yeah.
What is it?
So
Your opinion?
so historically, September isn't just bad for crypto; it's bad for stock market too. It's the worst month year over year. There might be months that are worse than September, but not every single year, right? So historically, September is the worst month for the equities market, the investment markets, right? So that's why it plays that way on crypto and it plays that way on stocks. But um, I think that right now, what we're seeing is, will we get a pullback if there's a recession? Most likely, yes. But the whole point of the title today, um, the biggest opportunities, and we'll show the chart here in a little while. We'll talk about the pullback periods and how far down the S&P, for example, can go, and that will give us an indicative because typically the S&P crashes, Bitcoin is double that, and obviously altcoins much worse, right? So. We'll take a look at all of that here in a little while. I got the S&P chart with all the recessions on it and everything, but I want to show you something though, OC. Check it out. We got this nice little pattern going on here. This may look familiar to some people. Big shoulder leaning in, head, little shoulder, retest, OC retest there. Okay, just to grab this, and I don't always trade patterns, but when I do, you know, it's with the Dos Equis in my hand. Anyway, check it out. Look where it puts us at. Right back in the golden pocket. Previous resistance, previous support range. Curious to see that. Just an idea. 117,000 is what that would come in at. But of course, we are getting sell off here on the 4 hour today. Rejection off that 1-to-1 line. Also previous resistance. I really do think that if this is going to be a continuation of a break of structure here, this needs to break this structure at the 1-to-1 line, 113, close a candle above that if we're going to continue to head up. This is the daily dynamic reactor that we were talking about, on the 4 hour dynamic reactor. I mean, that we called this rejection here on the other day, now needs to hold as support. So we were hoping for this rejection for a short. Now we're hoping for this rejection for a long and a continuation up to that 117 range. So, but yeah, September typically sell off month overall. It's just a thing that happens. So My dog is going crazy out there. Don't know if you can hear her barking. Hopefully, my suppression on my microphone
Oh,
is working great. Awesome. Good audio
you're
setup.
doing
Um,
fantastic.
let's go ahead and jump over into the news. Let's break this stuff down. Actually, no, let's go over and give a shout out to the chat because they're why we're here, right? We got French Toaster in here. Alexandra G is joining us. Username French Toaster. I appreciate you being here, man. Busy day at work. I'll be lurking. That sounds great. Crypto Alt Delete in the house with us. Trade Intuition. Bingo Bango on the phone. Unable to tag at the moment. Not a worry, bro. Just appreciate seeing you here. We got Steve Hickey in here. JR. Chris Wrights. Who else we got? We got people. We got people in here. Crypto Coin Mindset. Appreciate you, Keith. I saw that you were not live today. I would have redirected over to you. Kelly is in here. Caliphate in the house. Alex O Crypto. A lot of the OGs, man. I saw otters galore flooding the chat, but I appreciate everyone joining us here in the chat. You guys are awesome. Let's go jump in on this news and let's see what we got over there. And we'll go in through all this data. We had a lot of economic data come out this morning that is really important to know. But first, let's check out the metrics on Into the Cryptoverse today, guys. Currently, the crypto market cap sitting at $3.881 trillion. The trend on this is at $4.309 trillion. Undervaluation, only 9.93% right now. Current wristbands for Bitcoin sitting at 53.9%. This was up from the 52 yesterday. And then Bitcoin dominance right now sitting at 58.13%. Take away them stable coins, we're at 62.67. A lot of money flowing into stables right now. What about altcoin season? Great question, OC. I'm glad you asked. Altcoin season is currently sitting at 58.7%, neither in Bitcoin nor are we in altcoin season at this time. Sitting with 27 altcoins with a greater ROI than Bitcoin, 22 less than, still sitting below that level. 75 is the level to watch for altcoin season. In the past 24 hours, we had 88,310 traders get liquidated. Total liquidations came in at $266.8 million. And largest single liquidation order happened on Bybit. It was a Bitcoin trade for not much, just $2.43 million on a single trade. JR, I told you to quit doing that, man. Looking at the fear and greed index for Bitcoin right now, guys, sitting at 48. On the Bitcoin Fear and Greed Index, that is a neutral setting. And then Ethereum Fear and Greed Index is at 48, also sitting in neutral there. Looking at the Kabisi letter, absolutely insane, guys. And this is what we're going to talk about here in a little while. But he says U.S. just revised down June jobs reports lower for a second time for a total of negative 160,000 jobs for June. Remember, the data that came out today is for August. Now that the U.S. has officially lost 13,000 jobs in June, the first negative month since July 2021, guys. What just happened? Let us explain. We'll go into that more here in just a minute. Looking here at the crypto bubbles. Line, please. Crypto bubbles. That's the word. Bitcoin is currently sitting at $112,302, up 2.1% on the daily. Ethereum up 1.5. XRP up 1.8. Solana's up 1.3. Guys, remember we talked about this, and I said Bitcoin dominance was going to increase because Bitcoin leads the bull market. You can see with all the volatility today, Bitcoin holding up better than most of the alts, except for Doge, Cardano, Hyperliquid, which is a native token. We talk about that a lot. And then SWI. A lot of your other top 10s here, minus your altcoins, not doing as well as Bitcoin today. Bitcoin up 2.1%. What other big movers do we have here? Let's see, 4.3% on HBAR and 13.5% upside move today on World Liberty Financial. Still down a lot, though, from where it was at when it launched a couple days ago. Looking here at the stock market this morning, let's put this on the current, update it and fresh. There we go. Dow Jones currently down about 0.12%. S&P down about flat. It's 0.03. Evidently, the matrix has taken over at CNBC there. Let's pause that. Flashing down there. NASDAQ sitting pretty flat, neutral at 0.16% positive side. But the Russell 2K, small caps up 1% today. The volatility index sitting below 18, so that's a pretty good sign there. Overnight, Europe markets mostly in the green. Had a couple of red markets there in the Europe markets. Asia markets were green across the board overnight. But let's take a look at the bonds. Guys, we haven't seen this in a hot minute. we are down to 4.09% on the 10-year Treasury yield. It is getting a dumpskiroo, meaning people are buying up bonds. That's typically not a good sign, by the way. That means that people are fleeing the to safety zones, and the yield Treasury bonds historically for a lot of boomers was that. Where else is it going? Gold, and I do think we're going to see some of that go into Bitcoin off of these ETFs, guys. Just read an article recently that some hedge fund managers are moving from the 1% risk model of crypto to a 10% risk, 5% risk model in crypto at these hedge fund financial advisors. So that could also be some other money coming in. Looking at gold right now, gold currently sitting at $3,652, up 1.26% today. Silver is at $41.98. Copper sitting at 0.3% upside move. Platinum and palladium both green today. Platinum up 2.36%. OC, shout out to you. Palladium only at 0.6%. Let's go over here and talk about this economic data and how it rolled out today. Friday, September 5th. That is today. Non-farm payrolls. Guys, we were at 79. Actually, I think this was at 73. Yep, it was at 73. They revised this up to 79. Consensus and forecast is that we come in at 75,000. We came in way lower, down at 22,000 non-farm payroll jobs added. Unemployment rate moved from 4.2 to 4.3, and that is also a higher number there on the unemployment rate. Take a look here. You can see we're on a slow uptick since June of unemployment coming into the space. What else do we have today? Participation rate 62.3%. You guys see here we were at 62.2. They thought it would be down. This means that more people are trying to participate in the labor market right now, and they're just not finding the jobs. Matter of fact, payrolls rose 22,000 in August, less than expected, and a further sign of a hiring slowdown. This is according to CNBC. And then to top it off, guys, how about a potential for a government shutdown coming soon to a country near you? U.S. in a standoff right now at Congress, as lawmakers on Capitol Hill have less than 4 weeks to reach a deal to avoid a government shutdown at the end of September. Lawmakers will likely consider a stopgap measure to keep funding going for federal agencies, but even that could face hurdles as Democrats in the Senate appear uneasy about voting with Republicans to help them clear the 60-vote threshold. Looking at the chance of our rate cut right now, it was at 12 this morning. It's actually 2% first, and then I had to update the thumbnail for 12%. Now it's at 16%. Let's see the refresh and see what it's sitting at now. We're back to 12%. There you go. Guys, this is September 17th. We're right now looking at a 100% chance of getting a rate cut here in 12 days. Currently, 88% chance that we get a 25 basis point cut, 12% chance that we get 50 basis points. Take a look at October. 100% chance at December, 100% chance. We are definitely in the rate cut cycle. We're going to be taking a look here in a little bit at some of these charts here. What has happened with the S&P during recessions? Why are we talking about recession? Well, it has to do with rate cuts. These gray lines running vertical here, those are your recessions, and they align with rate cuts. Also going to go into the Beige book here in a little bit. Summary of the commentary on the current economic conditions by Federal Reserve districts. And of course, we're not going to go through the entire 50-page document. I had ChatGPT read it all for us and give us the summary. So we'll be getting to all of that here shortly, guys. But as of right now, we are seeing that the markets are getting some reaction off of this. Treasury bonds on the 10-year dropping. Looks like gold is pumping up, and a lot of the markets holding kind of steady, not really getting the shakeout that screams, oh my goodness, look at all the rate cuts. Look at all of the job cuts. We're going into a recession. I think money knows they're going to hold it in the dollars. They're going to probably lose. They need to be somewhere. But I do think, not financial advice, you're going to want some dry powder here real soon, guys. And that's going to be your biggest profit, biggest money-making opportunity that we have in this entire cycle would be an alignment of the economic trend to a trough, downside move, being able to inject at that point. That's where money is made. That is where money is made. So, OC, let's go take a look at gold and take a look at a couple of the alts and see how they're looking right now. We'll come back and break all this data down. What do you got for us?
Absolutely. If we're going to take a look at gold really quickly, let me just pull that up. But also, in the meantime, let me tell you that I hear you guys. I hear you. Like, let me go to yesterday's show right here. And at the very end, if you take a closer look right here, KTC to say hashtag save the curl. I went yesterday to my barber and told him, hey, look at this video. Look at it coming. This thing needs... Oh, wait. Where is it? Come on. This thing needs to stay at all costs, bro. He just laughed at me, looked at me like I was crazy. And then when I did not laugh back, he said, all right, we'll make it stay. He made it stay. All right, so KDG man, you got it. Let's go back to take a look at gold. All right, so gold doing fantastic. We were looking for this to play it out. I mean, we were expecting a long somewhere around these areas. If you guys were back in the day, where is it, or how far could it go, or where is it gonna be coming back down? Well, then we can calculate that with two tools. One of those tools could be our Fibonacci extensions. All right. Or the other one could be one of my favorite ones, which is predictive ranges. Let me see if I can bring them up. And let's see what our predictive ranges are telling us. Also, I'm going to be using the easy, laziest way to use Fibonacci, which is with our FIBP charts and also and let me just make this smaller so I have room for this, our Fibonacci trend. So there you go. As you can see, as soon, and this is something that happens, as soon as we break the purple line, guess what we were to find? The next newest blue line. And then, well, then the rest is history, right? So we went to a order block, bounce out of it, going to the strongest area right here. Let's check out our oscillator. We're losing some strength, or we're losing some bullishness, but we're gaining some strength. This is a little bit ambiguous because we don't know at this point if we cross over. We already have gained some strength, so we could have a very fast movement to the downside. But then if we come back at it like we did in here, right? Or like we did in here, you see how we start fading, but we gain some strength. We made one last push. So are we going to have that last one push, or are we going to be retracing? So this is a little confusing. This is why we have multiple indicators, right? Sometimes the data that they read is just not enough to take a decision. All right, or to predict the next upcoming movement. All right, so let's minimize that one and let's bring up our prime oscillator. Our prime oscillator is telling us that we're going to have that last one more move. We have our flip of the ribbon, true 7 pointing up, and we have a steady money flow influx in here until our money flow influx stays steady. We're going to keep pushing upwards. And also look at our volume metrics. We are trying to curl back up. So I would say that, and let me go back to the charts here. Let me just double click. There it is. And I think that we are going to have a little bit of a retracement, a 2 candle retracement or something around those areas. All right. And finally make, there we go, maybe 1 or 2, and then make one more high somewhere around the 3,656. Do I advise to jump in here because we're going up? No, not really. This is already too prolonged and the risk is too great
$5,000 gold's
for us
coming.
to
5,000.
5,000.
I pump those numbers up. Those are rookie numbers in this racket.
Let me see. I should be having another set of, there you go, predictive ranges. Let's see if those might do that area. $5,000. Wow. Really? Look at that. I mean, it's totally possible. It's totally possible. I will say that over time, nothing to, I mean, maybe from here to, I would say 6 months could be more than possible. But what is your time spent on the $5,000
2026.
gold?
2026.
All right, perfect.
Yeah.
Within total
Oh, yeah,
range.
it's happening. And $50 silver, at least.
Wow. Yes, I think so. And that is completely possible. That is completely possible. Look at that. Very, very, very close. And just measuring the last itty bitty run, and we have 3 of those. So let's go check this out really quickly before I throw it back to you, Piper. And if we take a look at here, well, once again, we broke purple. Yes, the first one that we hit was golden because it was on the way. But right now we're going, there we go, to 3,600. And I would say again that I think that we could be going any hit the golden one. So we are still within the same zone in here for target. So be careful, because right here we should be having a retracement. This is your opportunity to jump back into gold, right? Or if we create a range. But other than that, just jumping in here to get out in here, I would say it is just too dangerous. But let me throw it back to you, Piper. And next, I have XRP. We longed it yesterday, and we're in profits.
Sounds great, man. I'm sitting here reading the chat. Just BC talking about sick pics. He wants people want sick pics of him. He's been sick. If you guys don't know, that's why we haven't had too much Good Morning Crypto this week on the show. He's been fighting off the illness, but he's feeling better. So good to hear, BC. But yeah, we don't want please do not send me sick pics to my DMs, please. I appreciate that. Let's go jump over and talk about this stuff, OC, the Beige book. And if you guys don't know, this book here, it comes out every month. They put this out. It's a summary of commentary on the current economic conditions by the Federal Reserve District. This one came out September 3rd, and I've had time to glean through it. I'm not going to bore you guys with it. It's like 49 page. Look at this thing. It's long. We could sit here and go over all of it. Or we could have Pam, our market assistant here, help us out on ChatGPT. National Summary key highlights. Overall economic data, most districts, 8 out of 12, reported little or no change in economic activity since the previous period. Little or no change in economic activity. 4 saw modest growth. Overall, though, consumer spending was flat or declining across several regions, households feeling squeezed as wages struggle to keep up with rising prices. We're still seeing inflation, right? Tariffs and economic uncertainty were frequently cited as dampening business and consumer outlook. So businesses, companies, and the people, all saying, I don't really know where we're going with all this or how high prices are going to get. Retail and hospitality firms offer deals and promotions to attract price-sensitive customers, helping leisure travel, but not offsetting a decline in international visitors. The auto sector showed mixed trends, generally flat to slightly higher sales with growing demand for repairs on older vehicles. So a lot of people fixing their older cars instead of buying new ones right now. Manufacturing firms increasingly relied on local supply chains and automation, especially AI-driven data centers, which boosted commercial real estate activity in Philadelphia, Cleveland, and Chicago. The sentiment overall, though, remaining mixed. What about the labor markets? Employment was largely unchanged in 11 districts, with 1 reporting a modest decline. Firms remain hesitant to hire due to weakened demand and uncertainty. Attrition and automation, including AI tools, contributed to employment reductions. Layoffs were increasing in a few districts, while others reported growth in job seekers, meaning more people are looking for jobs because they may have been taking on another part-time job, or maybe someone in the house that wasn't working before is now coming in and needing to work. So a lot more job seekers popping up in the markets with less jobs available. Several districts cited reduced immigrant labor availability, particularly affecting construction, which, by the way, raises prices again. So wages showed modest growth in about half of the districts. Others noted moderate to flat changes. So prices overall, 10 districts described moderate or modest price growth. 2 reported strong input price growth, outpacing the selling price increases. So tariffs were a widespread driver of the rising input cost, materials, insurance, utilities, and tech services being a big chunk of that. While some firms passed on cost increases fully to the customers, many hesitated, constrained by price sensitivity and competitive pressure. So competition keeping those prices in line where they could have raised the prices. But we are seeing overall, what I get from this, weakening labor, increasing cost, decreased buying, but increased prices, right? And overall, this article, 48 pages, what does it say? If I had to sum it up in one word, stagflation. That's what I'm seeing from this data coming in, guys, and that is not a good place to be. Let's talk about this here. Let me bring this in. Can I get a refresh on that? Thank you very much. This is the history of our Fed fund effective rate, our rate cuts, guys. And if we take a look at this, the vertical lines on here, these are your recessionary periods. I had ChatGPT run all the data on this and give us some information on how has this looked when it's been 50 basis points. And she had some breakdown on it. So let's go there and take a look at that and see what she said about 50 basis points in these charts. So historical charts from Fred showing the effective federal rate funds over time with recessionary periods. What does this chart tell us? The blue lines track. We already talked about that. So why is this useful? It provides a useful visual timeline that pairs interest rates with economic downturns. You can observe patterns like how recession shading appears around or just after large rate declines, reinforcing the idea that major cuts often come as a reaction to and not in anticipation of a slowdown. Way too late. That's what that means. So summary, most major 50 basis point rate cuts occur as the economy is already weakening or in recession. This Fred chart, visual alignment of cuts in recession underscores the Fed's reactive pressure, not proactive. And overall, if we look at this here, looking back at modern Fed history post 1970, almost every first basis point cut has been closely followed by a recession. Like I said, 6 out of 7. So about a 90-some% chance there that we're going to see a recession. January 2001, Fed cut 50 basis points. Recession started in March 2001. Couple of month delay there. That was the dot-com bust. 2007, September, 50 basis point rate cut. Great Recession officially began December, a couple of months later. January 2008, an emergency 75 basis point cut. Recession was already underway. This is following the 2007 rate cut. September 1998, 50 basis rate point cut. During the Russia crisis, no U.S. recession followed, but global stress was high, and this is the main exception. This is the 1 out of 7 that did not lead to a recession, guys. March 1980, 50 basis point cut. Recession started January 1980. It was basically already there. Just took a while for them to officially say, yep, we are in a recession. July 1981, cuts began after prior hikes. Recession confirmed the same month. And then 2020, of course, we had the COVID recession that started and we got stimulated right out of that thing. So out of the last 7 times, Fed delivered 50 basis point cuts. 6 were followed by a recession within months. The only exception, again, 1998. So historically, a 50 basis point cut has been more of a recession signal than a recession preventer. And so if we take a look, I want to go over to the chart and pull up the S&P. Can we get the S&P in here? That would be awesome. Let's do that. S&P. Let's go here. We'll go to this chart and we'll pull it up on this one. And we'll grab the S&P off of here. Let's go there. SPY. There we go. Jump on that. And we're looking at the weekly here. I'm going to throw on recessions. We'll turn off everything else here. Turn that off. Turn that off. Turn that off. And now we have recessions turned on. Let's go back and take a look here at this thing, guys. And we're going to go back as far as we can here. There we go. No, I think I want the other one. I think I want to pull up SPX. It's going to be the same thing, but it just has more history. So there we go. SPX. There we go. Better history. All right, let's take a look and see what this looks like for pullbacks and why I said ultimately you want to see that you have dry powder available when you hit these recessionary periods. I'm going to put this on a little bit of a more truncated 2-week time frame, and let's just go take a look at what we have here. We'll go back to the 70s. There we go. Let's bring that in, hit that. There we go. Recessionary period, guys. Pull back down here from peak to trough on this was about 35%, okay? go in and pull this from the time that the recession actually kicked off, you're still looking at a 26% pullback on the stock market. Go here, second recession back in 73. We're going to start it about right there at the recession, pull that down. We're looking at 37% there. Let's get into this one there. There we go. Pull this one here, peak to trough. We're looking at a 21% pullback. Pull it here, peak to trough. You're looking at a 24% pullback. And let's go look at more recent times because I want to show you a comparison of Bitcoin compared to these S&P fallbacks, right? And so we're going to have to go with 2015 here because that's going to be about the only one besides the COVID crash that really plays relevance here. And we'll see here, peak to trough on this one. You saw a 15.1% pullback back in 2015, 2016. So again, let's pull that. Let's go compare it. That was a 15% pullback there for that period. And then I want to put in Bitcoin on this and we'll take a look at what Bitcoin did in that same time period. Come here, bitty boy. There we go. 2015. Get that on here. Turn off that. You can go away, sir. You're doing too much. You're doing too much. There we go. Let's go back and look at 2015 for that period there. Bitcoin had a small pullback here, right? From here to here, and that was about 34%. So again, like I said, Bitcoin's pullbacks are typically double, but look what Bitcoin did afterwards on that 2-week scale. Absolutely ripped off. Of course, that was at the bottom of the bear market. It aligned with our bear market bottom, where we see that in the with this new cycle coming up on our crypto winter. Probably going to be closely aligned with it for our bottoming there. But I will point out that it's a double pullback. So if you consider that we could get a 20 to 30% pullback on the S&P, could be looking at a 40 to 60% pullback in Bitcoin. What would that look like overall? A lot like the crypto winter. So, and it's not like an overnight thing. Remember, these are 2-week candles we were looking at there. So I think that overall you would see the pullbacks. Do you want to stay invested? Yeah, but if you want to catch that run up afterwards and you want to have the money to get into those markets at those price points, investing is how you're going to get away from all of this price crunch. And I do believe probably in the next 10 years that if you are not invested, you are not going to be anywhere on that bridge from poverty to fiscally capable, right? I won't call it rich. You might be rich. Depends on how you invest into it, right? Into your assets and your equities. But I think that overall, if you're not invested in something, you're going to have nothing. So, OC, let's go take a look. Actually, what are your thoughts on this? I mean, we just did a lot of breakdown on where we are right now historically with the all of the recessions that take place after rate cuts, and that we typically cut rates way too late, especially when we do 50 basis points. And that's what it looks like we're leaning towards right now, is a 50 basis point possibility coming up. And then, followed by a couple months later, recession. What are your thoughts on this? And then what is your investment methodology for dealing, coming out of this situation? What are you looking to buy? How are you poisoning yourself to be positioned for that situation?
Well, first of all, let's talk about what it works, right? Which is DCA. That is the core of your investment, right? Anything that is not DCA or buying and holding is not investing. Because
do you DCA the same amount every week?
No, I actually change it. I change it based on two factors. First, the Piper Academy, the Piper, the Piper plan, right? It gives you a hint on how much you should be DCAing, right? So you've explained that before.
Well,
so
not how much. A multiplier of what your norm is.
Exactly.
Yours might be $5 a week. It might be $5 a week for one guy, $10 or another for another guy per asset, and this gives a multiplier. So, doesn't tell you how much; it tells you how much of a multiplier to what you can afford. So,
Absolutely. So you just go ahead and check out your own finances, right? Out of your own finances, how much can you invest, right? That is going to be your total 100% per month or per 15 days or whatever, right? And
Right.
then, well, you divide that in, we advise 5 parts, and then you put that into compound savings USD or USDT. And then as you have a multiplier on Bitcoin entries, or any other altcoin entry, well, you take, let's just say that it was $100 a month, right? Just per se, you divide that by 5, and then you do like 5 times, and then let's just say that you have a 3x multiplier in Bitcoin, right? 5 times 3, and that is going to be the amount of of money that you're going to be pushing into your account this week. And that's basically it. I mean, let's come back into mentioning anything else that is not buying and holding. All right, it's not investing, which means trading is not investing, it's actually trading, right? You're trying to speed up the investment part by taking a higher risk, but buying or selling for a profit, right? Buying or selling for a profit, because you can also short the market in futures. So just to let you know, the bulk of my investment, it is compound savings and DCA. That's it. That's it. The rest of it all, it is altcoins buying and selling for a profit, and that's where the risk comes in, which is not the same in investing. Just want to make sure, guys, that you know that, because have you heard that I invested 100x on meme coins, right? Oh, you're not investing. You're not
Nope, that's
investing.
not investing. That is gambling. You went to the casino. Congratulations. I'll see you in Vegas. By the way, the trading, though, and a couple of things here, since I'm sitting right above BTCC right there, you can trade there with us using that link down in the description below. But they also, they got, the trading part, that's to make money so that you can invest, right? And shout out to Alex O, because I was watching him this morning. He made $700 in 3 seconds on a trade this morning, on the volatility run of that data this morning. So yeah, trade to make money to invest in solid projects, right? But also BC Port Corp, he is working on some stocks. Again, BTCC, we have tokenized stocks over there on that exchange. He's working on some DCA plan for stocks also for the bear market. So some more stuff coming to the Piper plan. Here soon might be the Piper BC plan. So we're working on some DCA setups on that. And then also Caliphant asked a question here. I do want to address that. She said, what kind of timeline are we looking at for this Piper, the recession? She said, how do you think it'll affect the end of the bull run? I think get a blow off top at the end of the bull run. I don't know that it makes it all the way into November 3rd, which according to the profit taking schedule, guys, November 3rd is the red line. That's the line in the sand right there on this profit line. I think it happens in October. And we just talked about an article yesterday that was talking about $157,000 top on Bitcoin in October. And then alts would run for a couple of weeks afterwards, because people would assume that pullback of Bitcoin price would in the end, that this is the opportunity for the post Bitcoin topping alt season, right? For a couple of weeks, but I don't think it's going to be all alts. So I'm actually looking at this from the perspective of topping sometime in October, towards maybe the end of the last week of October, and then we start to see the cracks forming out and taking the ground out from underneath Wall Street, and we go into November, end of November, we start to pick up momentum on the slide down. Of course, everything changes week to week. Some data may come out, or a tweet from Trump that he's putting someone in there that everyone goes, oh, this guy's going to fudge all the numbers on jobs. Yay, let's go. Whatever it may be, anything can happen. But as of right now, based on the data that I'm seeing, that's what I project. And if new data comes out, then we'll start our analytical cycle over, because we now have new information and we must now put it in and aggregate that for a new analytical cycle. So that's how that works. OC, let's take a look at some alts. We got time to take a look at a couple of altcoins here, but at the end of the day, I just wanted to touch on all of this so that you guys know the opportunity. That's what I see when I see all of this happening. stay keeping those clean at your job. You got to keep the income coming in, tighten down the belt where you can, make sure that you're not wasting money, and make sure that you've got some dry powder built up for the, one used to be once in a lifetime opportunity. Now it seems like every other year opportunity. But that's where money is made, guys. Money, you can make money in a bull market, but you get rich in a bear market. So if we do have that pullback, be ready to pull the trigger. And obviously our DCA levels are going to get big multipliers if we do get some type of pullback like that. And we will be putting it all in our Discord for the Piper plan. So I appreciate you guys. OC, let's kick it over to you. Let's take a look at some alts, and let's talk about what's going on with alts right now, because Bitcoin did get the rejection at that level that we were talking about, lost that dynamic reactor, and it did pull down. Here, I'll do this real fast before we go to yours. We did get that pull down off of that 1-to-1 line, getting a pull down to the 1-2-3-6 now, again on that fib, and we lost that dynamic reactor. So this pullback is happening right now on Bitcoin. Also, stock markets, just so you're aware before you jump in on those, OC, stock markets, all turning red now and getting sell-off on that job number. They're starting to finally aggregate that info and going, rate cut, yay! And then they go, what does this mean though? What do these numbers actually say? And then we get the true market effect of it. So yeah, this morning I was asked, is this bullish or bearish? By JR, I said both. And it's volatility is what was going to, because people are going to get bullish and think, yep, rate cuts are coming, everything's going to loosen up. And then they go, that means that they're just stacking Jenga blocks to make this higher. And that makes us weaker down below. So, OC, what are we seeing on alts right now?
Absolutely. Very quickly, guys, we are on 3 different trades. If you didn't, it is time to take early profits on XRP. It's basically giving back everything that we made yesterday. Yesterday, we jumped in here for a quarter of a position, trying to get another quarter of a position right down here. We did not make it. That is fine. And then, well, at the top of the range, high, and the high, of course, taking your profits, right? So 50% out should be somewhere around here. And right now, it's giving it all back. Important. I think that in this case, we're not going to be losing the 273. So just so you know, I'm going to reopen my entry right in here. All right. So I'm going to be moving this slightly lower, and I'm going to be looking for a next re-entry right there. All right. So that is going to be my next possible trade if we get down there. But in the meantime, you should be like this. 50% out already, so 50% out somewhere around here. And if this thing lets me draw, all right, and move your stop to enter. If you haven't, you can still save something. Take it. It's your money. Reach out and take it. All right, nobody's gonna do that for you. Take advantage that we did yesterday. Good analysis. It played out. Take your money. Another one that is actually playing out. It is the link short. We were expecting it to break out and then going for a retest, but since we fell out of the breakout, well, we looked the opportunity to short it. Where? Right after the breakout, going for the retest. So breakout, retest, right? And then off we go. Important. We also had a 1 quarter of an entry, and we have a stop loss at 24.36 because we were thinking that this could, like XRP, could be running back up. All right. And what happened, actually stood steady. So let's hold this. First and early take profits at 21.52. Let me mark that for you right here. And then the next, oh, don't move that. All right. And then the next one is going to be all the way down here at somewhere around 17.12. All right. We can start looking at 17.75, 17.12, and then 16.20, depending on how your ribbon is playing out. Remember, we want to see that next flip of the ribbon and being on some big supports. All right. But so far, keep an eye on your chain link. By the way, chain link, and this is important. We are, let me just, oh, come on, let me grab it. There it is. We are not yet having a full body candle in the green, which means, technically speaking, based on my strategy, we are not ready to move our stop to entry. But that is on your hands. If you feel that you should be moving your stop to entry, don't hesitate, all right? Don't hesitate on that. In the meantime, I'm going to hold it as is, maybe moving my stop to the nearest resistance, and then just giving it just slightly that overhang at the top. But remember, I'm gonna be taking early profits right here at 21.53. All right, so that's what I got. And one last one, it is XIABT. So we were looking for a pop. This pop is playing out, and right now we're gonna be entering a short position as we are taking the loud order block. All right, so I believe that we could be going a little bit lower here. Let's go and knock that off. Important, my stop loss is going to be on the previous week right here, and then give just a little bit of overhand, that wiggle room. And I'm going to be trying to re-enter here, and I'm going to try to just address at the bottom of this order block. If you take a look at this, is almost a 1-to-1, a 1.26. This is a very dangerous trade, all right? And that is because, guys, we are bullish. We are bullish, all right? But we haven't created a higher low. So we could be creating a double top, and we don't have confirmation. Confirmation is at the neckline breakout, all right? But I'm trying to get that an early, so I'm front running this possible pattern and front running it without a confirmation. That makes it very, very, very dangerous, because
Danger,
it's also
Will Robinson.
Danger, Will Robinson. I need to fix that, man. I missed that. I missed that. No, that noise. And something very important that I cannot grab. Oh yeah, it's because it's locked. It is that we created, and this is what we were expecting. Remember, the higher low. So technically, we do have a higher low. In fact, as Piper was mentioning, and thank you, Piper, because I actually did not realize it until today. Shoulder, head, shoulder, leaning into the right. So are we having a rejection of that invert head and shoulder? That's why we need to keep an eye right when we're hitting the, what I'm going to say, the 0.92 mark. And that is to call out that trade if necessary, all right? Once again, very dangerous trade, but Lincoln's playing out perfect. XRP did play it out perfect. And also we had, oh man, we have another trade. Let me see if I can have it here. That was Solana. All right, Solana. We were looking for a possible re-entry. We're going to be giving it some time because we are rolling curve back down. All right. So our first re-entry was barely there. We failed on that entry, which is fine, I mean, this thing happens. So this long is not there yet, all right? So that's why I'm gonna move it to the right. And this is just to pick up on what we left out yesterday on the altcoins area. And once we're back in here in this area, I want to see the dynamic react, sorry, the ribbon curling back up. If that happens, that is a long entry for me. If it not, I just let it go. Most likely it's gonna be a short all the way to a 187, but I'm not going to take it. And that is because I'm already into many dangerous trades, high risk trades. And despite I want to do it, I need to contain myself, because if not, this is what it gets you broke. Over trading, over leveraging, and not having stop losses. So throwing it back to you, Piper.
Awesome. Good stuff there, OC. Shout out to DJD from the blockchain. Lasers go pew pew. I see you guys joining the chat there. Penny Wise also in here with us. I got to tell you a quick story time with Aubrey Piper before we go. So my wife, she's been being contacted by some journalists on the news wanting to know about her relationship to a soldier that she served with at Fort Hood. They worked together at the Foundry program. She was an Intel analyst, $35, just like me. And so she worked there. And so my wife didn't understand what was going on. So she started to do some research. And yeah, crazy stuff here, OC.
Audio gone?
They're calling her the Black Widow of Texas. She's currently in prison, in jail right now, awaiting her trial for the death of her fifth husband. But now, because of that, she had a case way back in the day with her second husband, I think it was, or third husband, that she said she shot him in self-defense. But now they're opening up that case again also to see, those, dude, craziness. This chick's like ate dinner at our house and stuff, and my son was in ROTC with her son. But yeah, this is the case right here that they're contacting my wife about. So let me see if it plays here.
Given a $5 million bond, 48-year-old Sarah Hartsfield of Beach City is in jail in Chambers County. Investigators say her husband, Joseph Hartsfield, died in the hospital last month of what they call a suspicious illness. They believe foul play was involved. We'll follow it. For the first time, we are seeing the face of a woman murdered in a vacant home in Lamarck. This is
That's a different woman there.
Maria.
But yeah, this is that's the situation going on with that. So yeah, kind of crazy, man. Opened up another case. So there's all kinds of mysterious deaths around, like her stepfather's death, her brother's death from when she was a kid, to her second husband. Like, yeah, so little crazy. Matter of fact, they were interviewing the captain that was her commander, one of her previous commanders, and he goes, "I'm not surprised to hear this, but what I'm surprised about is that she got caught. She's whip smart." So yeah. And they put a $5 million bond on her because they feel that she was going to that if she was going to flee, that she would definitely disappear and they wouldn't be able to find her because she is a pattern of life developer for targeting. So she knows how to avoid creating pattern of life. So yeah, they put a $5 million bond on her and won't let her out. So craziness there. I just wanted to share that with you guys though. That was my wife came in and she's like, "Do you remember Sarah that I worked with at Foundry?" And I was like, "Yeah." And she goes, "She's in jail for killing her husband and she may have killed other people." And I was like, "What the hell?" So yeah, craziness, man. Continue to follow that news. But yeah, that's what we got today, guys. It's Friday. Don't unalive your spouse this weekend. Show them love, spend time with them, and don't trade too heavy. I do think we're going to see some pullbacks this weekend. Low volume, a lot of chance for manipulation. So appreciate everyone joining us here today. Appreciate the OGs for joining us over here too. Shout out to the Otter gang. You guys are awesome. Alex, though, much love to you, man. And we will be back here Monday morning. Don't forget to tune into OC, Trade Live with OC, Trade Setups with OC Guy at 8 p.m. Eastern tonight. And then hopefully Monday morning, we're back with Good Morning Crypto, kicking it off with BC Port Corp. We'll be back at 10 a.m. to go over all the data next week. There was one thing. I cannot forget this because this is coming out also, guys. This data here, almost forgot all about it. Almost forgot all about this data. Let's take a look at this. Kabisi letter, absolutely insane. Revised jobs. Yep, we know about that. In 5 days, the Bureau of Labor Statistics is going to revise the U.S. job numbers for the 12 months ending March 2025. So this is going to be for that 12 months going up to March of this year that just passed, right? Well, I guess several months ago. According to Goldman Sachs, a downward revision of negative 950,000 jobs is coming on this revision, guys. If you guys remember last year, we were talking about this big revision report that came out, and it was like 818,000 jobs that they had to cut that didn't exist. You remember that, OC? This new report for a new year is now 950,000 jobs. This would be the biggest downward revision since 2010. Guys, we're not out of the woods, nowhere near it. But we're going to be engaging every time those targets pull back. They're going to step into the light for us to grab them even lower. So we're going to keep this thing going, and we're going to make some money off of this. Horrible situation. It is a demise of a lot of people's financial stability in life, but we're going to be prepared for it, and we're going to try to finagle this. We're going to wrangle this into some profits. So I appreciate you guys. We'll be back 10 a.m. next Monday morning, bringing you guys the news, the charts, the markets, the headlines, everything you need to have knowledge, because knowledge is profit. Until then, guys, trade safe. Use some risk management. Peace, love, and profits. Go touch some grass this weekend. Later, guys.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done. You can't handle the truth. Emotional damage. We'll see you at the next one.
What the fuck they're doing.
Morning market report out. Boom shakalaka. We'll see you at the next one. morning market report. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude. Hey, it didn't break. What else you got?